Since 1983, FAME has helped business and education work for Maine. Contact the authority, the Finance Authority of Maine. You're watching Mainebiz Sunday, Maine's business news source.
Today we're talking about venture capital and business financing with Michael Gurau, founder of Clear Venture Partners and a columnist for Mainebiz, Robert Phelps, CEO of Bar Harbor Biotechnology, which has attracted venture capital, and Beth Bordowitz, CEO of the Finance Authority of Maine. Thanks for sticking around. Beth, I want to start with you this time. You know, one of the things that we've heard about on this show is that, well, sometimes it's the kiss of death, too, getting that VC, at least for Maine. When a company gets that venture capital, can they actually stay in Maine? There's a lot of pressure on those companies to produce, to be profitable, to get to that stage quickly, and to ramp up. And we find sometimes that Maine doesn't have the facility to do that, to be able to handle all that. So what is your experience with that?
Well, of course, I'm not really on the venture capital side, but we do hear about it, and we do participate in a revolving fund where we invest in venture capital funds, actually. And when we watch the companies, it is true. It really depends on the company. We've had some incredibly successful venture capital wins for this state that have stuck around, hired more, and so there's definitely a place for that. I think it's a matter of how big a company is going to grow, because we've also seen companies that were invested in and they've been purchased, which is the ultimate goal of the venture capitalist is to have their company purchased, and then because of other pressures they move away, either because they bought another company and the synergies are good out of state, they've got the employees out of state. It could have not even planned on the day they did the purchase in Maine.
Well, that was one of the questions I wanted to follow up on. Did they get drawn out of state because of their being attracted to areas that have that larger cluster that they can, I know you like, I had to use the word cluster sooner or later because you're on the show, the larger cluster that they can be associated with? I mean, you're a spinoff from Jackson Labs. In effect, so, and if that weren't there, I don't know, could you stay in Maine?
We could. We've diversified quite a bit. The first products that we brought out were mouse genetic oriented, which obviously was the spin-off from Jackson Laboratory, but then quickly went into human genetics. And obviously the institutions for human genetics in Maine tend to be thin, but fortunately for us, we're selling products globally. So
have any of your investors said, gee, shouldn't you be out in that closer to Boston or California? Or?
Not from the investors, really. There's certain appeal from outside influences that can ask, you know, would this be better suited for the products that you're planning to make going forward? But not from our investors directly. Yeah, they're pretty happy with us being here.
Good. Michael, venture capital is not for everybody. In fact, only about 1% of our businesses in Maine actually use this. So 2 questions for you. If only 1% are involved in venture capital, why is it important? And 2, how does a business know when they should be and when they can take advantage of it?
It is a low probability source of capital nationally. I think the venture capital wrap is as an investor, you look at 100 deals, you invest, you spend time on 10, you invest in 1. So we say no a lot. And as you say, very few companies in Maine and in general get venture capital. But it's high impact capital. If it works, it can be catalytic in terms of hiring and growth. And as we've talked about, it can result in the company being acquired and taken out of state, which isn't always bad. I mean, you often will find that company employees have had stock and decide to stay in the state and take some of their proceeds and start again, or the entrepreneurs who want to stay in Maine now have the resource to do that and start a new company. Bob Nevy, who happened to start a business in Maine, sold it out of state, and we started a new business here in the state. It has other benefits than the capital and the growth itself. It creates an ecosystem, a culture of growth and networking, and people can be drawn to the state because of a vibrant venture capital community, even though it's small. And so I think for the state's long-term innovation health, you need to have a vibrant community. Now, Maine is probably at the bottom of the ranks of venture capital nationally, so we'll never be Boston, but we shouldn't also be the Maine of 10 or 20 years ago where there wasn't anything happening. Right. So, I'm sorry, the second part of your question was...
How does a company know when they should try to access that? When's it right for them?
It's a function of the growth of their business and their ability to attract more capital than what's being offered. So if you have a certain kind of sector which has inordinate growth possibilities, biotechnology, information technology, clean technology, all of those are a good starting point. You typically have the kind of team a funder could back or be willing to, if you're not the right person, step aside. You have to have good gross margins, a healthy, profitable business, as opposed to a widgets business, which might be a commodity priced with very thin margins. So you have to have certain criteria to make yourself of interest, and you have to be able to find not only an exit over time, but you have to be able to find other investors in second and third rounds that happen after the first round.
And if I could jump in, I'd actually also add tenacity.
Well, I was going to say,
as the company owner.
And your story really speaks to that. I mean, you were aggressively focused on that bottom line, driving your company all the way. And you go on to say that you recorded as saying, adopting a ruthless loyalty to the bottom line doesn't hurt. I came into this as a complete capitalist, profit-driven, and that is venture capital friendly. So that's one of the things they're going to look for, right?
Yeah, absolutely. We were .com right out of the gates and made no pretense about it, which is interesting when you're spinning out of a .org or a .edu environment. Yep. But as a company owner or the president, when it comes to going out and getting the VC, you're going to get a lot of doors closed on you, and just keep going, just keep trying at it, and eventually you'll get that one. All you need is that one VC to get the capital in, and you can work wonders with that.
And those innovative companies, especially ones that are science driven, and it's interesting, and also with your story too, kind of the balance between the business side and the science side, and the venture capital. They want the business side. The science is what's going to eventually make the money, but it's the capitalist that's going to drive it to the profit.
If I could offer, not all the deals done in Maine are technology driven. So we actually invested in and exited probably the only Down East Maine food company ever funded by VC and exited in a venture capital way.
Who was that?
That was Lux Gourmet, which was the founder was probably interviewed by you.
Absolutely.
And John Burns, I know, has a number of food companies in his portfolio, consumer products companies. Yep. That's actually where the challenge is going to be in the future. Those companies are unlikely to find funding by contrast to the technology companies because of this economy. I think that was always a fairly idiosyncratic sector. So.
I want to weigh in one question here for you, Beth. In April of last year, Governor Baldacci signed into law LD1, an act to stimulate capital investment for innovative businesses in Maine, which authorized the Maine Public Employees Retirement System to invest up to $20 million of its pension fund into venture capital, and it calls for the creation of the Innovation Finance Program. What's the status of that? Is that going to have an impact?
Well, the Innovation Finance, the Innovation Finance Program is run by us, so we're working closely with the retirement system now to put that in place. And I hope it will have an impact. I think the retirement system worked hard to get a program that would be useful to them and to the state, and we'll have to see how it all winds out. But we should be ready to roll out by spring.
But they will invest in VC?
We'll see. They're very, very clear. They were absolutely
pretty risky stuff.
They were clear in their testimony that their number one priority is a return to the members of the retirement system. So if they invest in VC, as a lot of retirement systems do, it will be, I'm sure, with a very approach that is very thought out, thoughtful, and has a lot of parameters to it, because their number one priority is making sure that the retirees of Maine have a retirement fund.
Okay, we'll keep our eye on that one. I'm going to wrap this here, but I'm going to keep you around for our afterthought segment that we post on the web, because we want to come back and we want to talk about there's a new sheriff in town. We have a new governor. We have a new legislature too. The Republicans are really taking over Augusta, so we want to talk to you about what do you think that's going to do in terms of business climate, business capital in particular, and how can the state invest more in all of this that we need to really stimulate business. Oh, by the way, and also solve the $1 billion budget deficit at the same time. So stick around. Thanks.
Thank you.
You can catch more of this discussion in our exclusive Afterthought segment seen only on the web. Just go to mainebiz.biz and click on the Mainebiz Sunday link. We'll be right back.
Mainebiz Sunday is made possible in part by funding provided by the Finance Authority of Maine.